In today's video, we are going to initiate coverage on Netflix stock. Ticker symbol NFLX. They trade off the NASDAQ exchange, and their current price is $328.79 in after hours. So let's start by just getting a little bit familiar with what Netflix does. It's an American media service provider. Of course, everybody knows Netflix for their wildly popular streaming service and their very strategic pricing, okay? That's what has made Netflix popular. Obviously, this started as a DVD rental company, and it has shifted into the streaming service monster that it is now. A lot of people will refer to Netflix as the blockbuster killer. So it was founded in August 29th of 1997 in Scottsville, California. Its headquarters is in Los Gatos, California, and their founders, Reed Hastings and Mark Randolph. Make sure you take a minute and check out Reed Hastings. He's a very interesting guy. And, when you think of top CEOs, his name will always be at the top of the list. He's right up there with a Mark Zuckerberg or a Elon Musk or a Jeff Bezos or a Jack Ma. Now, most people are pretty familiar with Netflix, but, they have a lot of really great programming on their service. So they have Stranger Things, Ozark, Orange is the New Black, which I can't stand that show. And you can see their portfolio of shows and movies they have. It's very impressive. BoJack Horseman, Daredevil, Narcos, Black Mirror. So these are some of the best shows and movies we have out there, and that's what makes this such a bundled software package. Is real, you're paying a very low price to have access to all these shows and movies every month. So I just thought I would mention this too before we start analyzing the stock, is that The Haunting Hill House is now streaming on Netflix, and Making a Murderer Part 2. So I had a lot of fun enjoyed watching that a couple of years ago. Part 1 of Making a Murderer. And so now Part 2 is out. So that's pretty exciting. And then Chilling Adventures of Sabrina, that premieres on October 26th. And then we got a little bit of their upcoming content that's going to be released soon. So Ron White's new comedy special will be coming out on October 16th. You got Hip Hop Evolution, of course, Making a Murderer 2, Marvel's Daredevil, that's Season 3. The Night Comes for Us, Wanderlust, and then I'll just stop here. Adam Sandler's 100% Fresh comedy special. I probably will want to watch that. So I've got the 1-year chart pulled up on Netflix, guys, and what an investment this would have been a year ago. No question about it. So Netflix was trading around the $190 level, $191 to $195 level a year ago in October of 2017. And it even dipped down into the 180s and 170s briefly in December. But as you can see, they got some good earnings reports behind them, and the stock has went flying. Got as high as 400, got up to 420 a few times this year, and now it's drifted back over the past couple of months. So it was last time it was in the 400s was back in July. It's drifted back, like I said, by August it was in the lower 300s again, and now it's just kind of in consolidation mode. And this right here is just some of the pricing over the last 3 months. They've trended with the market, basically. Now, I covered the earnings report last week. I'll have a link come up right now, and you can go back and watch that video, guys, where I covered Netflix Q3 earnings, guys. They had an outstanding earnings report. They had an outstanding guidance, but the stock has pretty much lost all of its gains and drifted back down since then. Take a fundamental look at Netflix, guys. So this is a $143 billion market cap company with an enterprise value of $150 billion. Now, this right here has always kind of plagued this company as far as reputation. So they've had a very high trailing PE and a very high forward PE. So this company has always been referred to as overvalued. However, it has not affected the stock at all. It just continues to grow and get bigger. I remember when this was $800 or $900 stock before it got split a couple of years ago. It had these really super high PE ratios, and like I said, it's probably come up 200 or 300% since then. So Netflix has a 52-week change, 72%. You would got an outstanding return. You would have easily outperformed the S&P 500. And their 52-week high is $423, and their low was $178. So you can see this would have been a great investment a year ago. Moving down here towards the bottom, we got their profitability. So they have an 8% profit margin, a 10% operating margin, 5% on return on assets, and a outstanding 30% return on equity. Okay. Now we go over here. These numbers are updated through September 27th, and you can see that about 4% of shareholders hold the stock short of float, and of the shares that are outstanding, it's about 3.7%. So a little higher than some of the other FANG stocks. Of course, FANG is typically referred to as Facebook, Amazon, Netflix, Google. So the short percent of float is a little bit higher than the your run-of-the-mill FANG stocks, but still very manageable. It's not a percentage that really bothers me right now. They have a 34% quarterly revenue growth, and this is a big one right here. 210.9% quarterly earnings growth. So that's why the stock has so much explosion, okay? Is because the quarterly earnings growth is outstanding. Then we move down here to the bottom, guys, and this is very typical for these big internet companies. So they have $3 billion of cash and $8.3 billion of total debt, which is actually cleaned up a lot historically. So, like I said, all these big internet companies, they typically have a lot more debt than cash. Some of them don't, some of them are very clean on that side of things. But these companies can get a lot of debt. They usually hold a lot of debt so they can keep spending a lot of money, so they can keep ahead of the competition. That's what it's all about. So we're over here on Tip Ranks, guys, and the consensus analyst rating on Netflix is a moderate buy. Has a high price target of $480, an average price target of $410, and then it has a low of $150. So that's a little ridiculous. You do have some analysts that are very, very bearish on Netflix stock, okay? But as you can see down here, most of these ratings are a buy, and they're up in the high 470s, 480s, 400 range. Of course, you have a few holds. I will point this out to you right here, is that KeyBank did downgrade Netflix to a hold the other day and gave it a $377 price target, which is actually still, you're buying it at a premium now where the market has drifted back so far. But overall, Netflix maintains a buy rating, and very reputably a stock most people want to have in their portfolio. So this, to me right here, guys, is the real elephant in the room. Okay, this conversation right here is that so Disney plans to launch their streaming service in 2019, and it's set up to rival Netflix. Now, my friend Josh made a really good video about this last week. I'm going to go ahead and link it up. Guys, take a minute and make sure you watch this video. Very good conversational video. He kind of goes over all the things, all the real things Disney's going to be bringing to the table. And there is a mild bearish sentiment on Netflix, but I wouldn't just buy totally into that. I wouldn't buy totally into the bearish sentiment. I still think Netflix is a buy, but I think in 2019, guys, you're going to see Disney really start moving into the picture of streaming a lot. And so I think it really comes down to three things. And these are all up for conversation. I would love to hear from you down in the comment section. Tell me your opinion on it. But really what it comes down to is, are most people going to own both Netflix and Disney streaming services? I guess the next question would be, is there going to be a real shift to Disney and Netflix is going to lose a lot of its power? Or is Netflix going to remain dominant and Disney's going to have to fight just to compete with them? So I've heard this argument and this conversation 3 or 4 different ways, and I am yet to really have an opinion on it. Of course, Disney's going to be bringing Marvel, Star Wars, and Pixar movies to the table. So I think just, out of brand loyalty and brand strength, they're going to have some advantages over Netflix. But I know there's, like I said, a lot of Netflix exclusives. A lot of people are going to be unwilling to let go. If I was to lean in a direction, I would say most people are probably going to have both Disney and Netflix streaming services. And then it's probably going to take a period of time to really decide which the stronger of the two is. But Netflix is certainly in the driver's seat right now. Like I said, they had a great quarterly earnings report, and the numbers were outstanding, and the guidance was outstanding again. So the bar is set up high for next quarter. So in conclusion, guys, I'm still calling Netflix stock a buy here. I would like to see it drift a little bit closer to 300 before I would take a position. However, I'm going into 2019, my personal stock portfolio, with a position in Disney and no position in Netflix. If Netflix gets cheap enough and I become attracted to the price enough, I probably will pick up some Netflix stock. But I'm definitely going into 2019, preparing for 2019's trading year with Disney in my portfolio, okay? And I give Netflix about a $400 price target. I think that's fair right now because we just seen it really close to $400. Like I said, last week when they reported earnings, and just look how quickly that got not just erased, but they're about $70 under that now. So, like I said, a lot of that's due to the market right now, but this stock can run up very fast and it can run back very, very fast. Thanks for watching the video, guys. I hope you enjoyed it. Like I said, make sure to check out Josh's video. Let me know what you think about Disney stock. Let me know what you think about Netflix stock. I'd love to hear from you. Have a great day. Thank you for watching.